let me give you a very small introduction. So, my name is Neerav, as you guys already know, and I'm the author of this book called Think with the Markets. In this book, what I've discussed is how to reach from analysis to a proper trading decision. And the purpose of this webinar is to go over the charts of this book and to discuss the insights of this book, or what do you say, to discuss the concepts in more detail. So what I will be doing in this webinar is I'll be going over, first of all, the chapters, like the chapter name and what we will be discussing in the chapter itself. After that, I will discuss the charts which are mentioned within the book. And of course, the charts I have are expandable here, unlike the Kindle editions you have. So it will be sort of a supplement. It will also be a spoiler because we will be going through the book. Okay, guys. So before we move further, just give me a final yes. Okay, thank you, Fareed, Nilesh, and Daniel. So let's now continue with the actual content. So first of all, let me first of all share the book. So in the table of contents, you can see the chapter 1 is called possibilities. So the name of the chapter is possibilities because our work as a trader is first to determine the simple thing, which is the possible direction or the directions that the market can take. So as an Elliott Wave analyst or whatever way of analysis anybody uses, the first thing we do is we analyze the possibilities that the market can move into or can proceed into. Do you guys agree with me on that? Just type in a quick yes. That our job is to analyze the possibilities where the market will go, not the certainties. Okay. So thank you, Daniel. So now that we know that we are going to analyze the possibilities, what gives us an edge here is the way the Elliott wave is designed, or the way Elliott wave works, not designed. So in Elliott wave, we determine the wave structures like waves 1, 2, 3, 4, 5, and then the particular structures within a wave. For instance, wave 4 can be a zigzag, it could be a flat, it could be a triangle or complex. So that makes it interesting because, as we will see further in the examples, it will allow us to determine clear directions as well as clear entry and invalidation points. So that is what makes Elliott wave the best tool to think in probabilities. And to think in probabilities is basically to think with the markets, right? That's why I have labeled the book or named the book Think with the Markets. Because if we can think of the various possibilities of the which the market can take, then definitely we are thinking in alignment with the market, right? So that's the reason for naming this book. Now let's get ahead and quickly check chapter 1. Chapter 1. So I will just start off with the actual charts. So in chapter 1, if you want to follow along, you can even go ahead and open the Kindle book on your phone or something. But I will just suggest you focus here because I will be covering everything step by step here anyways. So in chapter 1, you will encounter that there is this image, and there is a starting point and an ending point, and there is a twisting and turning road, which has multiple A, B, C, D, E, F, G, H, Z. So these are basically turning points, right? So every turning point you can see here is being labeled. So A is a turning point, B is a turning point, C, D, E is a turning point. Now think about this. If our objective is to go from the starting point, which is this one, to this ending point, which is this one, then we will have to navigate through all those twists and turns, right? However, if we look at it just like that, like we have to go from A to Z and we have to go through so many turns, it will become overwhelming, right? Some people might even think that it's too difficult and they will leave the journey even before starting it. They will give up before starting, right? So the point is, which I am trying to make with this image is, if we break down the problem, right? Instead of going from A to Z and seeing all this mess in the middle, if we break down the problem to go from A to B itself, right? And then once you reach B, we break down the problem to go from B to C itself, and then C to D. Then do you think it will become easy or will it become difficult? Anyone from the audience? Easier. Thank you, Daniel. So now that we know, if we break down the problem into smaller bits, it becomes easier. And even the complex journey can now be thought of as achievable or doable. Now, this simple concept we are going to apply in the market in our Elliott Wave analysis. And this is what I call point of reference. If you have been following my webinars, then that is the same concept I use in the webinars, but it has been expanded upon in the book a little bit more in depth and applied to actual trade instead of just analysis. So now we will discuss point of reference a little bit more. I think you have gotten the idea of it and why I showed you this image. So now let's move on to the second part. The second part is, or the second part of the chapter 1 is the various possibilities that the market can take. So when you will go into this chapter a little bit more, I think on the second or third page, you will find that I have determined 3 different possibilities or scenarios, as you can see in the book over here now. Now the scenario number A is, I'll just leave the book as it is. I can explain it right here. So the scenario number A is A, B, and C. So 3 scenarios, right? You have, let's say, 2 possibilities based on your Elliott wave analysis, right? Possibility number 1 is that the market can go up, and possibility number 2 is that the market can go down, right? This is a classical scenario. We will discuss more on that in much more detail as we go along. Let me just state out scenario number B. Scenario number B is that you have again a possibility which is going, one is in the upward direction, second is in the downward direction. But you have very strong reason to believe that one of these hypotheses is the correct one, right? So we have not yet discussed what to do in scenario A. I will first discuss what to do in scenario B because it's the easier one. In scenario B, again, I repeat, we have 2 possibilities. One is that we think the market can go up. Second is that we think the market can go down. But you have some very strong reason to believe that the downside possibility is the correct one or the better option. So in a scenario like this, when the direction is not very clear, but you have a bias for a particular direction, you can take partial position, right? Partial position in the sense that if generally you risk, let's say 3% per trade, then you can say, let's say take 1% position or 0.5% position in the downward direction in scenario B. So that's what scenario B is. Moving on to scenario C. The scenario C is that the market is pointing with multiple hypotheses in the same direction. Let's say you have hypothesis 1, hypothesis 2. They both are pointing in the upward direction. So obviously you can take the trade over there if you believe your analysis is correct. So I believe C is very self-explanatory. B, I have just explained. So if you can clarify if you have understood these 2, then we will move on to the A, which is the main motive behind the book or the main theme behind the book. Anyone from the audience? Yes or clear? So yeah, thank you guys. Let's move on to the scenario A. Now in scenario A, we have 2 hypotheses. One is pointing up, second is pointing down. We are not so very sure which one is the right direction. We don't have a very clear bias of the right direction. So what to do in such a scenario? Now let's look at that, what I have discussed about that kind of scenario in the book. For that, I will head on to image 2, which is a part of chapter number 1. Yeah, Anshul, just give me a few minutes. Let me get on to the image and then I'll take your question. So in scenario number A, as I said, we have 2 hypotheses, right? The first hypothesis is that the market is going up, and the second hypothesis is that the market can go down. So in conclusion, direction is not clear, and because the direction is not clear, there is no trade. Hence, we will wait for the invalidation, right? Now, if we wait for the invalidation, either hypo 1 will become invalidated or 2 will become invalidated. In this particular case, I have just assumed that the 2 will become invalidated, right? And if that happens, we will then reanalyze the market for a new possibility. At this point, either the market will give us a new possibility, right? If it does give us a new possibility, we will take that new possibility, which is in this case being called hypothesis 3. We will replace hypothesis 2 position with 3, and we will do the whole analysis again, right? If there is no new possibility, then of course we are just left with hypothesis one, right? If hypothesis one is the only way we think the market can proceed, obviously we will take the trade on hypothesis one. I believe this is a very simple logic structure, and I think it is clear, right? Just type in yes if it's clear, or clear if it's clear, so that we can move on further, because I will now build up my further lecture or whatever you would say on this, right? Okay, thank you, Daniel, Aman, and Farid. Now that we are clear on the simple fact that we have two hypotheses and we will follow this logic structure, next thing I would like to point out is that when you go to the markets and analyze actual charts, sometimes you will have more possibilities than just two, right? In this particular case, you have just hypo one and hypo two, right? Sometimes you will have a third hypothesis and maybe sometimes even a fourth hypothesis. But the simple fact is, if you can understand and apply this on two hypotheses, then you can do the same thing on three or four or however many the hypotheses are, right? So complexity is just gonna take you some time to apply the same thing. And when you practice this simple concept, it will become inherent or natural to you. But the logic or the reasoning structure will remain precisely the same, or more or less, this will be the logic structure which you will follow each time. Okay, so let's just first quickly check the content of chapter number 2. So as you can see over here, chapter number 2 is titled In My Temple. So I would like to comment a little bit or expand a little bit upon that. So first of all, has any of you read the book called The Art of War by Masterson? It's a classical book. Okay, Farid says no. What about others? Somebody must have read it. Anshul is also saying no. Daniel heard about it but not read it. Susanna is saying yep. Okay. Okay, so let me just expand a little bit on what the art of war is. So the art of war is a book written in a few hundreds of years ago. I don't remember exact age or the time it was written, but it was written in an very old time when people used to wage wars with swords and everything. So you get the point. It's an sort of ancient or historical text. In that book, Master Sun, who is the author of the book, he tells that how you can understand the war, what is the philosophy of war, and most importantly, how to win a war. So it's a very famous book. If somebody goes into military, I think that's the first or one of the most basic texts they have to read. If somebody goes into politics, then again they read it. And in trading, obviously, it's sort of an essential reading. So not getting much into details about where it's relevant, let's see the relevance of it over here. So in that book, Master Sun says a very interesting thing. He says that before the battle starts, I, the general, will meet with all my subordinates in the temple, right? So the temple, he basically means the real temple, because they will say their prayers before going into the battle. But even before they do that, they will discuss the strategies which they will be implementing within the battle, right? So that's the most important part. Remember, he says that we will meet in the temple and I will discuss strategies with my subordinates of what to do if this happens, what to do if that happens. And then he says the most interesting thing. He says that in a battle, there are two sides, right? One second, right? So in a battle, there are two sides, side number A and side number B, let's just say, for the sake of convenience. Both sides generals will meet in the temple before the battle, right? Let's just say this is the temple, and please don't mind my poor drawing. So anyways, once they meet in the temple and they discuss the strategies, Master Sun says the most interesting thing. He says that the side which spends the most time in discussing strategies is the side which will win the battle. Then he says that hence the party which will win the battle is already decided even before the battle actually starts. Are you guys with me? Did you guys understand this complex yet simple point? Okay, thank you, Susan. Thank you, Nilesh. What about you, Daniel, Farid, Madhavji? Okay, so it looks like everybody is on the same page. So now think about it in terms of trading. Let's just say you are going to plan your trade, right? You are going to, let's say, plan your trade on crude oil or gold or whatever thing you trade, right? Doesn't really matter. So that is not the point, Pragnesh. That is not what I'm trying to say here. So the point is that the side who decides or takes more time in planning is the side which will win the battle. And the reason he says that is the side which takes more planning or spends more time on planning knows more complexity of the situations that can arise. Or you can also say it has discussed more situations. So let me explain it in even simpler terms. So the simple point is, let's just say there are two traders, trader A and trader B. They both are trading the chart of crude oil. Trader A takes 10 minutes, right? And he discusses or thinks about one possibility. Let's say he discusses about hypo one, right? He thinks the hypo one will go in the upside direction. At the same time, trader B takes 30 minutes, right? And he discusses two possibilities on his chart or sees two possibilities on his chart, hypo 1 and hypo 2, right? He thinks that the hypo 1 is going to take the market in the upside direction, whereas the hypo 2 will take it in the downward direction. Based on that, he has invalidation levels for both hypo 1, INV means invalidation, and hypo 2, right? Now you look at the situation of trader A, right? He only has a hypo 1, and that is only pointing in the upward direction. If by chance the market goes up, he is lucky that day, he will make some money, possibly. However, if the market goes down, he wouldn't understand what's happening, right? Only trader B, who has given more time to the process of thinking or strategizing, will be able to understand what happens, right? And that is because he spent more time in the analysis part. And that is why I was emphasizing the part of analyzing the markets will determine who will be the victor. Is that clear now? Or does that make it even more clear what we just discussed? Yes or no? Very quick. Okay. So now let's not waste too much time. And yeah, guys, again, I'm emphasizing do not try to bring in your prior knowledge here, right? Because if you have a knowledge of something, you will try to correlate it with it. What I'm trying to establish here is that you should come with an open mind and think outside the box. Because if you just think within the box, then you aren't really going to achieve a new level or a higher level, right? So, anyways, now that we have determined the fact that which side will become the victor, that means if you spend a little bit more time on systematic analysis of the market, you will have a edge, right? Of course, if you are spending 30 minutes, that does not mean someone else is not spending 1 hour. And that also does not mean someone else is spending 3 hours with a team of 10 analysts, right? Like a hedge fund or something, right? But what my point is here, you must spend adequate time on the strategy part, right? That way you are not caught off guard, no matter what happens in the market. You must determine at least two scenarios, one at least in the upside direction, one in the downside direction. That is the basic theme of Elliott Wave, that you are not caught off guard. You at least know one way for the upside, one way for the downside with your bias. If your bias says the upside is strong, you take a small position in the upward direction. But if things go wrong or things don't go your way, then you have a plan or a strategy for the downside. Okay. Now that we have that all cleared up, and you also now know why I have referred to war, it will be worthwhile pointing out that in the further parts of the book, the titles are all sort of in the theme of warfare, right? So we'll take a look at it as we go along. But for now, let's get back to Elliott Wave, right? Let's get back and let me share some charts with you. So, okay. So I think you can see chart number 2 on the screen. So this is the chart of copper, right? This particular trade will be discussed in the whole book. And before I start discussing the actual chart and the trades, I like to make it clear that while I was writing the book, I had actually 8 examples from different trades, or 8 trades basically, right? And the book was like very big. It could be like 200 plus pages. I had expanded upon it, done the analysis and whatnot, and written about it. But later on, I decided that what's the point of keeping 8 analysis? It will only confuse the people, right? If I can deliver the same content with just one example and keep the book small, then why not do it? It's sort of an experiment here. Generally, what I've seen is what writers do or authors do is they try to establish themselves an authority. And what they do is they just write nonsense number of pages, repeating the